Netflix is currently sporting tepid sentiments from analysts. So this and more, this tepid sentiment from analysts came to our notice from this piece written on Seeking Alpha, and the author has it that Netflix rebounding as analysts dig into subscriber growth. And this is just a summary of what the author um, found out. So he began by saying Netflix is up 2.6% and reclaiming some of the share price ground lost over the past 2 weeks, joining other tech names that some of the only stocks seeing positive action as at yesterday, the 20th of July 2020. And yesterday, which was 20th of July 2020, an update from bullish Bernstein pointed to long-term subscriber tailwinds expected from the aging of a higher penetration user group based on heavy growth in the first half from older age cohorts. And even an update today from Credit Suisse, which recently downgraded to neutral, points to subscriber growth, pointing to Q3 net adds that are pacing modestly ahead of what it thinks of as conservative guidance. Global app downloads have been roughly flat this quarter, year over year, after 2 quarters of COVID-fueled extraordinary growth. Credit Suisse notes with gains coming in Asia Pacific versus declines elsewhere. Netflix downloads still remain a large global lead among peers, the firm notes, with 27 million quarter to date versus 18 million for Amazon and 7 million for Disney Plus. In the US, that lead is smaller, 4.2 million downloads quarter to date versus 4 million for Disney Plus and 3 million for Hulu. And Netflix screen time lead is still intact, a 34% share, down from Q2's 31st of 37%, but ahead of YouTube's 20%, Hulu's 11%, Amazon's 8%, and Disney Plus 4%. The stock trades at 8.3% 2021 revenue, Credit Suisse points out, but a reasonable 19% of 2025 price earnings ratio. Discounting cash flows brings it to a price target of 525, implying a 6% upgrade. Netflix has joined other FAAMG names for far outpacing S&P 500 returns over 6 months, except for Google, which is tracking closer to the broader market's modest gain over the period. And then we also have this piece here on Yahoo Finance, and it says Ensemble Capital recently released its Q2 2020 investor data, a copy of which the fund posted a return of 22.66% for the second quarter, outperforming its benchmark, the S&P 500 index, which returned 20.54% in the same quarter. You should check out Ensemble Fund's top five stock picks for investors to buy right now. Okay, and then this is the letter. It says Netflix is 8.5% weight of their portfolio, and we're discussing our Netflix thesis in the past, but now we are going to highlight the competitive and financial strengths that Netflix has demonstrated since we last discussed the business a couple of years ago, especially in light of the expected competition that has finally arrived from traditional media companies launching their own streaming services such as Disney In addition, the emergence of the COVID-19 pandemic around the world has led to accelerating benefits for digital entertainment and global production. 2 years ago, we shared that Netflix was reaping the benefits of its unique business model, where generational shift in video services over the internet enabled Netflix to dream big and bet big to become the first global scale direct to consumer subscription media company. So we will include this link for you to read up. This is quite a long note. So we're just going to go down and see more. So in July, they published an article revealed that is Yahoo Finance, revealing that Greenlight Capital is bearish about Netflix. The investment firm believes that Netflix stock has a lot of downside going forward. In Q1 2020, the number of bullish hedge funds positions on Netflix Inc. stock decreased by about 4% from the previous quarter. So a number of other hedge fund managers don't seem to agree with Netflix growth potential. Our calculations show that Netflix Inc. is ranked number 13 among the 30 most popular stocks among hedge funds. Okay, so we'll return on the. So obviously from that what we've read, some are positive, some are just modest. So we call it pretty much tepid sentiment. So this is the summary page of Netflix. So let's see if we can get anything on the ratings. Open a new tab. So before we go back there on the ratings, we just have a look here and see market cap of $219 billion, enterprise enterprise value of 228 billion. So you have a couple of news here, and this company here, Twist Bioscience, stores new Netflix original series on its synthetic DNA silicon chip. Okay, we're going to cover this company, Twist Bioscience, in the video coming up, and we have here the comparisons with the S&P 500 and its components. So these are the ETF funds, ETFs holding Netflix. So these are Schwab's sector list. Liberty Latin America, United States Cellular Group. Okay. Electronic Arts Inc. Rating summary. I think we have that here on this page. We didn't need to go there. Okay, so we're here now, and no, you can see all the ratings here. The ones we have here, none of them are, really, at the topmost. So we have this will be the topmost for Morningstar. This is this should be a buy. This is the buy, the topmost outperform. So all of them are just very much, yes, I would say very much neutral on Netflix, very much neutral, not bullish at all. So that can also mean a lot of things. Some people might see that the neutral position of analysts, or neutral sentiment of analysts, as an indication that it might be an indication that it is a bullish and it is a bullish indication, meaning that there's just a few things that can also make them change their opinion about Netflix, and if they change that, they will go in and simply buy. So in other words, this is how some people view it. Some contrarians view this sort of neutral sentiment of analysts as probably a bullish sentiment. Even though it is not, but even though literally it is not, but by implication, this is how they view it. And you can see now from the charts that in the past 10 trading sessions, Netflix has closed down 8 times. It's 8 out of that 10 trading sessions. It closed down below the 20-day trend line. This is a 20-day trend line. This one here, this trend line. It closed down 8 out of those sessions. So then again, yet again, this is also another indication that it may be a time to join in. Obviously, yes, it has also been trading sideways since the 20th of July. For a month now, it's been very much trading sideways. So for some people, this is a good time to join in, and because things have cooled off again a bit. This is from the peak of this year, which was on the 10th of July 2020. So going by all those negative sentiments, and by this sideways movements and consolidation of late, some people might conclude that yes, something is about to happen, and obviously we're already there. It's rebounding, and from here, from the 11th of August, you can see that it is definitely on the upside, and even though we can see here the MACD hasn't really indicated any momentum as such, just of late, but there isn't very much you can really say. But the curve itself, indicates, yes, that things have started to also look up. The chart of the price, the line, the price chart is looking is inclined upwards. So going by that, the analyst sentiments and tepid, the lukewarm attitude and all the stuff, so people might indeed conclude that yes, maybe very soon it might join its cohort, the fan cohort, and start to do positive things. Okay, thank you very much for watching this video, and don't fail to subscribe to our channel. Thank you again.